I get asked a lot, should I rent at the moment or should I buy a home and get into the market? Well, in this video, we're going to compare renting a property or buying a property and running the exact numbers on what the differences would be. One of the important things to note is that you could rent vest. So you could rent a cheaper property and buy an investment property which has higher rent than you're paying. And that's going to give you arbitrage. But we're going to compare a scenario where you could have bought a property or you could have rented it and not done anything else. So let's compare those numbers. So this is the rent or buy scenario, specifically looking at a Brisbane example. So in this table, we're going to compare renting a property versus buying a property. So renting really has lower upfront costs, which means all you have to do is put down your bond and a couple of weeks of rent, and you can move into the property and move on with your life. It also has more flexibility. So renting gives you that opportunity to move and try different suburbs and different locations, and you can break lease realistically and move on. I've had a few people do that in my investment properties over the years where they signed up and a few months later, I want to change, I want to move, and they can just do that by handing the keys back and paying a bit of fees along the way, and off they go. A downside of renting is you do have less control. There's no control over the home to make it exactly how you'd like it, or knock down some walls, or upgrade the bathroom, or really spruce up the property in a meaningful way. Yes, I see some tenants which do make some changes and have to revert them back at a later date, but really you lack control compared to owning a property. Another thing to note is you don't have any equity or stake in the property market. So there's no equity growth unless you have other property investments or other investments elsewhere. But just purely renting versus buying a property, you don't have any equity growth or equity upside. And rents are rising. We're hearing a lot of people, not being very happy with 10 or 15 or 20% increases year on year because costs are going up across the board. And so rents have been rising with the entire market. So let's take a look at buying. You're building equity over time. You own and control this asset. You also have some fixed repayments if you want, or you've got a good idea of what your monthly repayments are. And with rates falling at the moment, that's improving for a lot of people based on their minimum repayments. You then have a bit more control and stability. And if it's an investment, you're getting those tax benefits. If it's an owner-occupied residence, you get capital gains tax-free in Australia if you do sell the property. So whether you're an investor or an owner-occupier, there can be some tax benefits on either side of that equation. Some downsides is there are higher entry costs. You need the deposit saved. You need $35,000, $50,000, $100,000 to break in and put a deposit down to then go and buy the asset. And so then you've got to pay stamp duty and other fees and legal fees and other costs. And so you've got to factor all that in to break into the market, which could be 2 to 5%. And then maintenance is your job. You need to manage the maintenance. So manage the managers. You've got to have, if you're running this as an investment, you've got to get your property manager to get the handyman out to fix the light switches and bulbs and all those issues that come up with owning an asset or owning a property. So let's take a look at SQM Research's graph showing rents in Brisbane over time. And this is just an example, okay? There's going to be different data sets which show different things, but you can see Brisbane was pretty stagnant between 2010 and 2020 in terms of rents, with only a small uptick in rents over time. But since that COVID money printing boom, what we've seen is a boom in rental increases. And so, rents were looking at that low 400 to 500 range, and now they're jumping up towards the $800 a week per range in Brisbane or Southeast Queensland. So this means you're at the whim of the rental market, and you do have to pay market rates when it comes to rent. Unless you've got a friend or a family member who's going to give you a property for cheaper rent, you do have to factor this in when you're looking at the rental scenarios. So let's take a look at a practical and real example where you've got this same house and you've got two options. You could either rent it or buy it. Now, here's a house in Oxley, which is on the southwest side of Brisbane, and you could buy this for around $800,000, or you could rent it for $750 per week. Now, let's compare the two scenarios. Let's do some basic maths and look at each side of that equation. So in scenario one, you're renting this property for $750 per week, and your cost of actually owning the property is around $996 per week based on a 6.5% interest rate. The cost per year is around $39,000 if you're renting, but you don't have any headaches of maintenance and management and things like that. If you own the property, it's costing you a bit more, $51,800. I'll move myself over so you can see the rest of the numbers. Now, Is your money gone forever? Well, yes, you're not getting it back. It's going into the landlord's pocket and covering their expenses if you're renting. Whereas if you're buying the property, you at least control the asset. And so you're banking or you're looking for capital growth to do the work for you. And so you're not getting any equity growth if you're renting this property. But let's say, which we've seen in this example property, that you're getting around 11% growth. Now, long-term averages of properties across Australia have typically seen growth around 5 to 8%. It depends on which data house you look at and which figures you're looking at and over which time frame. But in Southeast Queensland, you tend to see over a 30-year window something like 8% growth. But myself as an investor, I like to run my numbers off 5 or 6% to be conservative. The reason we're showing 11% growth is this is more recent numbers based on what's happened in kind of the last 12 months. But you could halve it and look at 44,000 if you were looking at 5.5% growth to see what the growth potential could be. And so you could get something like $88,000 of capital growth or equity growth based on the current market value and it going up 11%, but that could be $44,000 or $33,000 if that growth rate was lower. And so do you control the asset when you're renting? No, but you do control it when you're buying this property. And then is there opportunity for you to refinance this deal and go out and buy another deal down the track? No, but there is if you own it. And so it's clear to me that rent money can be dead money unless you're reinvesting and buying other assets. And if you had the opportunity to either just buy or just rent a property, I would definitely just buy a deal. Get yourself into the market and break into the market to give yourself that opportunity for growth potential. Now, you don't want to buy the wrong style of asset. You don't want to be sold on off the plan or high density, small apartments or things like that. You still want to buy with good fundamentals, and you need to go watch other videos of what a good fundamental deal looks like. But I think the important thing when comparing renting versus buying is that you do need to own assets. Rent vesting can be a great option. It can allow you to rent for $750 per week and then invest elsewhere. But if you just had the option between renting and buying, I would still be buying to break into the market and give yourself that exposure to capital growth over time. And so this is the real question: which is better? Do you have the funds together to even get into a deal? And so you've got to work backwards from where you want to be. If you're feeling like you've got no savings at the moment and you want to break into the market and buy your first property, maybe you have to move back home. Maybe you need to pick up a second job for a few years. The most successful investors I've seen have taken action. They haven't let the excuses or the feeling that other people are doing better weigh them down. They've continued to move forward and they've had the vision to know that, okay, yes, if I have to get a second job for a few years and I have to work hard to save my capital and I have to find my first deal in a very cheap, affordable suburb, but still buying with good land fundamentals and good growth potential. So in my opinion, it is better to buy and break into the market and hold that asset over a long period of time. And that's exactly what Emily and I did in our journey. It wasn't easy. People look at where I stand today, and I'm so blessed to have a property portfolio sitting around $9 to $10 million. And I'm so blessed to control my calendar and to pick up my boys from daycare and to be able to go to New Zealand for a holiday and take off some more time around Christmas and things like that. But all of those things didn't come because it was easy. I had to work 2 or 3 jobs. I had to save with Emily when we were a young married couple and sacrifice and work hard, and we renovated on all of our deals. And so you might not want to push as hard as I've pushed because I'm currently 30 years old and I have choices. And I was pushing very hard to have that autonomy earlier in my life. But you might say, oh, I don't want to push that hard, but I do want to look to get one property every 3 years or one property every 5 years and just chip away at my future potential so that I can have a better retirement and so I could have more choices at my job in the future. So I think in my opinion, the options are clear. You want to be building your asset base over time rather than just focusing on renting and the expense side. You want to be focusing on how you can build your personal asset base and compound that wealth over time. So if you're interested in getting some help and buying your first property or an investment property here in Southeast Queensland, head over to purposeproperty.com.au to book a chat with myself. And I'd love to hear your thoughts in the comments below. Is rent money dead money? Let me know and give this video a click over here. I'll see you in this Wiggles. I'll see you in this video over here. All right, peace.